Yo, welcome back, everybody. So, Voyager Digital reported earnings today, so we are going to talk a little bit about how that went, because it was basically not very good. And I want to start this video off by saying that I called Voyager Digital out, I don't know what it was, maybe like a month and a half ago, 2 months, whatever it was. Who cares? It doesn't matter. And I made a point that perhaps they could be entering a valuation that's within reason where you can start looking at the company. And I even made a small investment, but here's the thing, the point I'm making here is when it comes to these very risky companies or the risk is very high, um a high risk high reward scenario, you don't invest a lot of money. And there's a point I want to make because a lot of people are getting burned on this stock, not company, but rather the stock itself. So I shouted out that I'd probably make like a small investment around 500 to 1,000 because, that's not something that would keep me up at night. Well, no money I invest keeps me up at night because I'm gonna be fine no matter what in the short term. I make good money at my job. So really, first of all, yeah, only invest what you can. It is turning into a whole discussion that has nothing to do with their earnings. Only invest what you're willing to lose, people, even on strong companies. But on companies that are a lot more high risk, high reward, like a Voyager Digital, you really should not invest that much. So when I called them out that maybe they were entering into a reasonable valuation and value territory, which started around 5 a share when I had called that out, I made a very small investment that wouldn't keep anyone, forget me, nothing keeps me up at night, but I made a very small investment that shouldn't keep anyone up at night. And I mean, this is the reason why, because it's high risk, high reward. I got my feet in just for the shits and giggles, but I mean, the earnings wasn't very good. You had transaction revenue down. The revenue did basically just about meet expectations. It beat by like a couple percent, but EPS badly missed. Minus 11 cents per share was expected. It was like negative 32 cents a share, so that's a really, really bad miss. And that just has to do with just underlying stuff in the business. Cash burn was a lot worse than expected. Margins were a lot worse than expected. Now, does that mean it's the end for Voyager Digital? Well, no, because remember, we take things as an investor on a quarterly basis where you look at things and you reevaluate and you go, okay, well, maybe that's a little alarming, so that's not the end of the investment. You just keep an eye on the investment now and see if things get better or worse from quarter to quarter moving on. And then you normally say, like, if you consistently quarter over quarter over quarter over quarter see things going wrong, maybe you want to cut your losses if something changed for you fundamentally. For me, it was such a small investment. Knowing it was high risk, high reward, I'd just leave my investment in regardless. But the main thing I wanted to mention in this video and what really tanked the stock down was they announced they're doing a private party share dilution, and they're diluting the shares at $2.34 a share average, which I found a little concerning. I mean, excuse me. The thing is, I follow every company but I invest in, even if it's a very small investment. And I noticed with the CEO, he was making a lot of claims and interviews. Yeah, they were small YouTube interviews, but he was making a lot of claims and interviews that the stock is extremely undervalued. And this was when it was around like maybe four something a share. and he was making claims saying the stock is extremely undervalued right now, and the company, and it shouldn't even be down to these levels, like implying it should be back in like the double digits. And it's just kind of weird that the CEO would say one thing where he's like adamant that they should not be anywhere near this, stock price. Yet then they turn around and announce on earnings day, and they've had this information, I'm sure, for a bit here. They turn around and announce on earnings day that they're going to dilute the shareholders. And not only are they diluting the shareholders, they're doing it at a $2.34 average on the dilution, which is really, especially for people heavily invested in the stock, that's a gut shot. Especially when a CEO said not a month ago in an interview, I think it's worth way more and it's very undervalued right now. And then you dilute the shares at $2.34 a share. That's gotta hurt for a lot of investors. That really does have to hurt. Um, and I get it, they're doing it, and they basically said they're doing it because, you know, the cash burn was pretty bad this quarter. And I get it, partially it had to do with transaction volume being down and due to what some people are calling like a crypto winter or whatever. But I mean, yeah, for some people that's why they went down today mainly. The EPS miss sucks, I get it. They basically met in revenue, beat by a little bit, but it was the dilution and it just how honestly insulting for some investors the dilution must have been. $2.34 average. Um, I guess the good news for investors is considering that is the share dilution that they're going with and what someone's willing to pay, I suppose. That should be a fairly strong holding point for the stock for a while, but I would get again, high risk, high reward. I made an extraordinarily small investment in them, so it doesn't affect me. But I'm sure people who are heavily invested feel a little cheated that the dilution was at such a low price. But yeah, that's all I've got for y'all. Honestly, not a very good earnings at all between that really bad EPS miss and the big share dilution at such a low price. But this is what happens when you're in a high risk, high reward environment when you invest in a stock. So, you never know where crypto is going to go specifically because if anyone says they know where it's going, I think they're full of crap. No one knows where it's going. People do acknowledge that, things have not been great for crypto, and naturally people are a little more bullish on buying crypto when you're in a bull market. Again, that's the opposite of what the mentality should be. If you believe in something in the long term, whether it's crypto, whether it's gold, whether it's stocks, if it's in the red, you should want to buy more. Not not when it's bullish, but people we've talked about this on the channel before. People see green and they want to go. People see red and they want to stop. So transaction volumes are down. So it's hard to say how Voyager is going to look, except to say probably not very good, as long as transaction volumes are way down because we're in this quote-unquote crypto winter. So, I get why they needed to do the share dilution. I think just some investors are going to feel it was a little insulting at the price that they did it at. But, okay, y'all, that's all I've got for you. Again, recap, not really the greatest earnings quarter. Really wasn't good at all. You met revenue, badly missed EPS, and you had a pretty big share dilution for the company. So we watch things quarter to quarter, especially on this channel. You don't write a company off after one quarter. You just see how things look the next quarter, the following few quarters, and you start to look and see if bad things consistently are happening or if good things start to happen, and it was just a 1 quarter thing. So, okay, that's all I've got for y'all. And yeah, all right, bye bye.